Hello everyone and welcome to the February Policy Insights. I'm delighted to have here Val Smith, head of the Department for Authorization at the FCA. And we asked Val to be here today because in December we were vocalizing the FCA, our members' frustration about the authorization delays and the workload, and we're very happy that the FCA has looked into this very seriously and are here today to explain to us what's happening, how they improved their own processes about this. So I would ask Alison, whom you all know. Alison is Director at FScom and our leader of Project Regulator, to ask Val a few questions on behalf of our members and how we will see these things improving in the future. Alison, I ask you to go on. Thank you very much.
Thank you, Riccardo. And Val, thank you very much for joining us. As you've said, Riccardo, there's no secret that there have been significant delays in applicant firms being even allocated a case officer. Are there any updates you can provide us about when we will see improvements?
Thank you, Alison, and thank you both for the opportunity to speak today. So firstly, we recognise that our response times are not good enough. This has part been driven by an increased demand for authorisation. So in 2020 alone, we saw a 70% increase in firms seeking authorisation under the e-money directive, and demand in the other areas has increased. And I have to say 2021 has been just as busy. We are also applying much greater scrutiny to the applications we receive. As Nico Rathi, our CEO, said in a speech last July, if you let a bad firm or individual into the system, it takes up the time of supervisors and enforcement and has impacts for the livelihoods and health of consumers. Just one decision at the start, not letting them in, could prevent all that. However, we are taking steps to address the delays firms have been experiencing as well. We're significantly increasing the amount of resource at the gateway, with a total of 100 permanent colleagues being recruited. For payment services, this has resulted in the creation of a second team to deal with applications from across the payments and e-money sector, and our total headcount is increasing by around 60%. This additional resource should improve the speed at which we're able to allocate and assess an increasingly complex caseload.
Sounds very good, Val. What does it actually mean in practical terms, do you think, for the firms who are in the queue at the moment?
So most immediately, we will be providing updates to firms on when they can expect a case officer. We're also carrying out a high-level assessment of the cases in our queue with the aim of providing some initial feedback so that firms can get working on that before the case officer is allocated. All applicant e-money and payment services firms should receive feedback over the next month.
You mentioned volumes being one of the reasons why the delays have occurred. Can you talk to us about any other reasons that there might be?
Sure. So as I mentioned, we're applying much greater scrutiny to the applications we receive. And you will have seen the letter we published to the sector in the summer of 2020, setting out some of the key risks of harm that we see from firms in this part of the industry. And to help us address these risks of harm, we are going to place and have been placing much greater focus on 4 key areas: safeguarding, prudential risk management, financial crime controls, and the knowledge and experience of key individuals within firms. And this increased focus naturally means that each individual application takes us longer to assess.
Following on from that then, are there any key issues that you've seen since you've taken this more detailed approach?
Yes, unfortunately, the quality of applications we receive tends to fall some way short of our expectations. So over the last year, fewer than half of the assessments we've completed have resulted in approval, and that number is unfortunately going in the wrong direction. And there are a few key areas that we see that are leading to applications failing. First, applicants are too often not ready, willing, and organised. So, for example, they will have submitted applications where key documents are missing or might be submitted in a draft state. Now, whilst applicants might be willing to correct mistakes or gaps as we go along, we don't believe that's sufficient for an applicant to submit a really poor quality application, but then show they're willing, with our help, to address any deficiencies. We also see a lot of applications where the individuals in firms do not have the relevant knowledge and experience in payments or transferable skills. And in our approach, firms should expect that we will test that through discussions with firms. And in many of those discussions, unfortunately, far too many firms are unable to answer the questions that give us confidence to approve them. I would say this affects not just small firms, but is also a challenge in some of the larger applicants too. Linked to this, we also see in applications aggressive growth plans that are not matched with a suitable planned growth in the control framework for the business. And we think that this can be reflective of that lack of experience in terms of understanding how your controls need to grow with your business. We also see too many applications that are not bespoke to the firm. We appreciate that there is some degree of commonality in certain businesses across the sector, and so a degree of templating may be appropriate. But sometimes this goes too far. And when we talk to firms about the policies they've submitted, they don't always understand what's in them because they've not been involved in creating them. And then they can't apply them again to their own business. The last thing I would say is that we don't see everybody seeking to keep up to date with FCA publications and our expectations of the firms that operate in the payments and e-money sectors. The most recent telling example for us has been the frequency with which firms have not either created a wind down plan or have submitted one lacking in the key elements that are now set out in the approach document and that we published the previous year in our interim guidance. We do take a dim view of firms that have clearly not done their research before submitting an application, and it can be quite evident.
Val, what you're saying stands to reason, and it's, you know, it's not rocket science. It's nothing that's unreasonable there. Albeit, I think understanding that is your expectation, that's what you're looking for, certainly helps applicant firms. So I was wondering, what advice would you give to a prospective applicant firm at this stage?
So I've got three things for you. So one is do your research and read the guidance we've published. The approach document provides a whole wealth of detail about what we expect from firms. If you need a safeguarding account, get moving on that straight away. We know that that can take a lot of time, and we really encourage you to do that early on. We will not approve a firm that needs safeguarding until we have the evidence that the account is open. And finally, when you make your application, make sure it talks about your whole business and not just the payments and e-money elements. If we can see other aspects in the business besides those, we will want to understand the detail, because it is how all of the different aspects of your business play together that can have an impact on your ability to meet the regulatory standards. It's quicker for us all if it talks about that at submission. Thank you.
Excellent. So I don't know, Alison, if you have any more questions, but I think that Val has been quite clear in all her messages, and I do hope that our members will appreciate the fact that the FCA has taken the time to respond to them and their frustration. And of course, we do hope that collaboration and understanding from the industry will meet the requirements that Val has just outlined, and also that, you know, if there are, we know that the FCA is on the business side, and they will always be able to communicate and maintain the flow of information that we have a long time ago established between the Payments Association and the FCA. So we're here to, you know, facilitate, talk. No one is not willing to work. Everyone is here to improve and make growth happening smoothly. We don't want delays. The FCA knows that. We will, you know, maybe come back to you in a few months, Val, to see how our members have learn the new lessons, and then we'll take it from there. But I'm sure that this could be the last time that we have to talk about authorization. So I would really thank you, both of you, once again for your time today, and see you very soon. Thank you very much. Goodbye.
Thank you. I look forward to our next conversation.
Fantastic.